This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to explain why a company should never assume that it is insured or that it is an additional insured of someone else's policy. And a contractor who needs permission of the insurer to be protected that didn't get that permission of an owner-controlled insurance program finds itself in deep doo-doo. Team Industrial Services, Inc., founded at Incurred, a $222 million judgment against it in a wrongful death lawsuit arising out of a steam turbine failure in June of 2018 at Westar Energy, Inc. power plant. Team sought indemnity for the judgment from Westar Zurich American Insurance Company and two other insurance companies, arguing that it was or should have been provided protection by Westar's owner-controlled insurance program, an OCIP, through insurance policies issued by Zurich and two other insurers. In Team versus Zurich, a November 29, 2023 decision of the 10th Circuit Court of Appeal, the appellate court resolved the dispute, acknowledging Team's arguments were well-reasoned and creative, but inadequate. In 2010, Westar entered into separate master service agreements with Firmanite and Team to perform work at the Westar power plant and other sites. Team was to perform preheat and stress-relieving services, and Firmanite was to perform valve maintenance services. Both master service agreements, MSAs, stated that Firmanite and Team are independent contractors required to procure their own liability insurance and to name Westar as an additional insured on the policies. They both also stated that, quote, contractor shall not assign or transfer any of its rights or obligations under this contract without previous written consent of Westar, which consent shall not be reasonably or unreasonably withheld. In 2013, Westar instituted its OCIP, through which contractors and subcontractors could obtain insurance protection for work performed at covered locations. Westar had discretion to decide which contractors would be eligible to enroll in the OCIP. Eligible contractors had to complete enrollment forms to be considered for participation. During the time relevant to the dispute, insurance was provided by a Zurich policy whose premiums were paid by Westar. According to Zurich's policy, an enrolled contractor's rights and duties under the policy may not be transferred without Zurich's written consent. With permission from Westar, Firmanite submitted an application seeking enrollment in the OCIP and was enrolled in 2013. Firmanite was required to report payroll hours for each month to the broker Aon. The payroll hours reported to Aon were used by Zurich to calculate the premium to be paid by Westar for the relevant policy period. Westar never made Team eligible to enroll in the OCIP. Team never submitted an enrollment application, and it was never enrolled. Team's parent company acquired Firmanite's parent company. Although Team and Firmanite became sister companies, they were distinct legal entities and never merged. Team assumed Firmanite's workload at the power plant. Firmanite's insurance coverage under the Westar OCIP continued even though its service contract had been retired. Firmanite's coverage continued even after it perhaps should have ended. Team argued to the district court that it inherited Firmanite's coverage under the OCIP via a change order and was therefore insured for the work it performed at the power plant. It also asserted alternative theories, including reformation and the doctrine of promissory estoppel against Westar and Zurich. The district court ruled that the change order unambiguously retired Firmanite's MSA and left Team's MSA as the sole governing document. The court declined as a result to reform the Zurich policy and rejected the promissory estoppel, breach of contract, and breach of fiduciary duty claims. Team ignored that the enrollment in Westar's OCIP was not automatic. Westar alone could designate which contractors were eligible, and eligible contractors must apply to enroll in the program and then be accepted by Westar in order to receive coverage. Also, under the direct and express terms of the Zurich insurance policy, coverage could not be transferred without Zurich's consent. Since Team never enrolled, nor was it even invited to enroll at Westar's OCIP, nor did Zurich ever give written approval to a transfer of coverage from Firmanite to Team, coverage did not exist. The change order relied upon by Team did not contain a mention of insurance coverage or the OCIP. There is no ambiguity in the language of the change order from which one could infer that Team would thereafter be provided insurance coverage through the Westar OCIP or otherwise. It was clear to the 10th Circuit that the notice is to go only to contractors already covered by the OCIP, not contractors like Team who were not enrolled in the program. In sum, no contractual promise, nor even a hint or suggestion by Westar or Zurich entitled Team to coverage under the OCIP. Since Zurich was necessarily one of the parties to the insurance contract, reformation would require proof that Zurich intended to insure Team. Team provided no argument, much less evidence, that Zurich intended to name Team as an insured. The Zurich policy explicitly protects Zurich from such claims by requiring any transfer of coverage to be approved by Zurich in writing. Finally, Team raises a perfunctory claim of promissory estoppel, and since there was no allegations that Westar knew about the reporting, it could hardly have expected to induce Team's reliance. Nor was there any evidence of a promise by Zurich to provide insurance coverage to Team, and therefore the 10th Circuit affirmed the judgment. In my opinion, when Team's parent company acquired Firmanite's parent company and took over the work originally done by Firmanite, it assumed that it was covered under the OCIP, but did nothing to confirm the fact, proving that breaking it up into its component part, the word assume will cost Team $222 million. Insurance, even a contract as complex as an OCIP, must be fulfilled, and to gain coverage, Westar needed to allow Team to apply, and Team needed to file an application with Zurich, and Zurich had to agree. None of those things happened, and Team therefore had no coverage. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. Please tell your friends and colleagues about the blog and the videos, and let them subscribe as well. They're all free. And if you are interested, you will, and subscribe to the blog or the videos, you'll have access to every new blog posting, usually 5, sometimes 6 a week. And you'll have access to the more than 4,650 blog postings. If you're interested in further detail about insurance, insurance law, insurance claims, insurance fraud, please consider subscribing to my Substack publications for a very small fee. Thank you for your attention.